keeping production unchanged. This is despite the fact that, remember, we have seen the price of oil retreat more than 25% from the all-time high that we saw in the middle of July. And also, we have heard at the fringes the typical OPEC price hawks, Iran and Venezuela, really agitating for OPEC to consider a production cut, given the fact that we have seen that very violent pullback in prices. But in the last couple of hours, we have seen the headlines come out from Dow Jones citing a senior Gulf source talking to the Al Hayat newspaper. This could be the Saudi Arabian oil minister Ali Al-Naimi saying that any move to cut OPEC output is unjustified, especially given the fact that world oil demand is expected to increase in the first quarter. So the bottom line here is that OPEC are expected to keep production unchanged, but informally they may agree on tighter compliance to production quotas in a bid to reduce overproduction. Back to you now.
Thank you very much for that, Sri. Well, let's bring in Jonathan Cornefeld, Director Asia with Hudson Capital Energy, joining us here in our studio. I mean, let's just get to OPEC in a minute. First of all, I do want to bring up a comment from big oil tycoon T-Boone Pickens, who says that he believes that we're not going to really fall below the 100 mark, that there is enough demand out there to keep us at 100 or above. Would you agree with that?
I would agree with that in the long term. There's certainly any number of factors, and on a daily basis with volatility, you can certainly see the market go below $100, and he understands that too. What he's saying is, in the longer term trend, we're certainly going to bounce off maybe 100 or 95 or even $90, and eventually continue this trend of going higher. We're only in basically a short-term correction, and by short-term I mean maybe 6 to 8 months before the market continues going higher, continues its current track.
So it's very much a cyclical correction as opposed to a structural correction.
Absolutely,
yeah.
absolutely.
Okay, so keeping all of that in mind, what do you think OPEC is going to do?
OPEC, as Sri outlined right there, they always try to avoid surprises. They kind of want it out already, what they're going to do in terms of, they don't want to surprise the market on a negative. So the production quota right now is about 29.67 million barrels per day. OPEC has been producing between 700 and 900,000 barrels extra per day on top of that. So it's very easy, and this is basically what all traders in the market is expecting, is for them to really say nothing except that we're not going to lower our quotas, but they can very easily pull back that 700 to 900,000 barrels per day, which we think they've already done, actually. So you're going to start to see that show up in world inventories in the next couple of months.
Priced into the market?
It is certainly being priced into the market. There are a couple things that have been priced in. Hurricane Ike has already been priced in, and if you look at the fact that we're trading 105.5 right now instead of 108 or 110, traders are already starting to think that this hurricane may be a non-event, but it's going to be a couple days more before that is actually true or not.
Jonathan, do you reckon that the inventory data this week is going to show the second round effects of the disruptions caused by Gustav last week? We got JP Morgan in a preview of the data saying that we could see a more than 10 million barrel drawdown in the headline figure in crude oil. That would be a very bullish signal for the market.
Well, it would only. I actually beg to differ. I think there will be a draw. You're going to see a couple negatives this week in the inventories. You're going to see a large crude draw. You're also going to see lower imports because obviously you can't get into the Gulf because of the storms. And also you're going to see a decreased refinery runs due to that's a couple things. That has to do with the refiners are buying less crude because they can't get their hands on it, and also they don't want as much crude because the refinery margin is so weak. They're not really turning it into the gasoline. So I think if we see any number between maybe a draw of maybe 4 to 8 or 9, then the market is going to accept it and actually continue lower. If you see something maybe bigger than 10 or something really outlandish like that, then you may see a swing, maybe a day or two where the market goes higher. But everyone is kind of expecting that, and it would be digested within a day or two.
And broadly speaking, Jonathan, in terms of the outlook for prices right now, is the momentum quite strongly towards the downside, on the bearish side of the trade, especially given the fact that we have seen the dollar in the ascendancy?
The momentum is certainly on the downside. All of any bullish factor, such as a hurricane, is certainly in the short term. The major factors, hedge funds being short, just bearish trend in general is lower. Any sort of bullish news has really been digested and spit out by the market. The market is certainly going lower. I think the dollar may continue to improve despite the enormous run it's had in just the last couple months. I think the Fannie and Freddie rescue is going to be positive in the short term for the U.S. credit markets. That's going to add some more weight to the dollar. And in that sense, the crude oil will certainly, I think, test the $100 mark pretty soon.
We've got to leave it there, but thank you very much for joining us. Jonathan Cornefeld, Director Asia, Hudson Capital Energy. We'll have more market updates for you after this short break, so keep it right here on CNBC.